I've put together 8 very important lessons and tips about trading psychology, how to master your emotions, and how to become better as a trader with full confidence. So let's get started, and those are 8 trading tips that I think can make a big difference in many traders. I see it always in our students that those are the things that really make a difference. So let's get into it. First, a daily loss limit. And a daily loss limit is quite important, so you should determine and predefine a set or a number, percentage, or in monetary, in your currency, account currency, that once it is reached, you will stop trading for the day. This is usually after 2, 3, 4 losses in a row. That really depends on your personal makeup. Some traders get emotional during losing streaks very quickly. So maybe if you are one of those traders, after you've experienced 2 losses in a row, maybe it's already time to take a break for the day, go away from your screen and get your mind off of trading. For other traders, if you are a little bit more emotionally resilient, you may have a daily loss limit that signals you after 3, 4, 5 trades that it is time to stop trading. And one of the benefits, especially early on, is that you will see after a while, once you have done this, that you don't need to make back the money right away. It's not important that you end the week or end the day green particularly. There's always another trade, there's always another day, but what you don't want to do is you don't want to dig yourself a deeper hole than what is necessary. So this can be something that can change the way you look at your trading and help you understand and deal with losses in a more, focused and a more goal-oriented way. And over time, you will get the feeling that, okay, it is okay to lose. I don't need to make back my money. I just need to focus on the process, and then it will work in the end. So daily or weekly loss limits can have a big difference. At the same time, you should not have any performance goals. So there's no goal to the upside. And I get this question quite a bit when people ask me, so what is your weekly or what's your monthly goal in terms of percentage or account currency? And in my personal opinion, I think this is a bad approach, because goals anchor you. And when we stop or when we go one step back, where do you get goals from, and where's your performance goal coming from? And I've seen many traders have those Excel spreadsheets where you put in your account balance right now, and then you project your account balance maybe 1 or 2 years into the future. And your goal is to make $1 million in a year or in 2 years. And then you calculate backwards how much money do you need to make every month or every week. But obviously those numbers, they are not grounded in reality. They are just pulled out of thin air. They have no basis based on they're not based on your actual trading performance or your trading style. How many trades do you get? What is your expectancy? And all of those things, they're just completely random. And you should probably see that those random goals, they have nothing to do with the reality of your trading. And what happens is, if you are very close to your goal, or if you have reached it actually, then you may take the foot off the gas pedal, and then you may be too passive and you may miss very profitable trading opportunities, and then you are actually underperforming. Whereas on the other side, if you are very far away from your goal, you may start acting and trading too aggressively because you want to reach your goal. And you can see on both areas, on both levels, it will impact your trading behavior, which it should not. Your performance goals should not impact how you actually approach your trades and how you approach your charts. Charts and trades should always follow your rules, independent of whatever goal or whatever plan you have. Follow the rules, follow the trades, make sure that you execute every trade as perfectly as you can. Be open to what the market offers. Some weeks will be better, some weeks the market will just not give you a lot of great opportunities. Sometimes even the best opportunities will not work out. So you cannot really plan for that. And this is where trading and our regular 9-to-5 mindset are really deviating. And many traders who are coming from the general 9-to-5 world, they are used to having a regular and steady payment, and this is just not possible in trading. Although they tried to somehow get around with that by setting arbitrary performance goals, it doesn't work that way. In trading, you just need to acknowledge that you have volatility in the way you will earn or lose money. Some weeks will be better, some weeks will be worse, and you just need to trade what you see. Leave the ego at the door. This ties in very nicely with the previous example. Trading, again, if you want to be a professional trader, it's only about focusing on the process. Make sure that you take the best trades possible and cut the trades when they don't work out. I've seen many traders get involved or get their ego involved. They want to prove that they are right, especially when those traders are active on social media or they have a trading group where maybe there's a lot of testosterone, a lot of boys and a lot of men trying to trade together, and they're trying to show off who's the best. And then the ego gets involved, and then you're not following your plan anymore. You don't want to take the loss. You want to ride the winner longer than what you should do actually. And this is where the ego gets in the way. So really pay attention to who do you interact with? How do you talk to other people and other traders? And is your self-worth derived only from your trading or from your trading in a big way? Which means that, do you feel too good and too happy when you have a winning day or have a winning week? And do you feel down, and do you take it out on other people in your real life when you have had a bad trading week? This is a sign that you are taking trading too seriously and that your ego is somehow mixed up in all of that, where your view of yourself is derived by your trading results. That is really bad, and you need to check that. Manage expectations. Expectations and trading goals often go hand in hand. When people have unrealistic expectations, and I've talked about this in the past, it will influence their trading. If you believe that you can be profitable within 6 months and become a millionaire after 12 months, obviously you will approach trading in a very different way than a person who understands that this may take a few years and you will not become a millionaire anytime soon within the next 5 to 10 years. But over the long term, you may be able to create a life where you can break out of whatever it is where you are stuck right now, or wherever you want to break out of. You can see that those two mindsets and those two expectations lead to a very different approach, whereas one trader will be very aggressive and he will get very frustrated once he realizes that his unrealistic expectations are not being met. This will lead to frustration and anger and then to bad trading behavior. Whereas the other guy who gives himself 5 or 10 years will have this long-term approach. He will be quiet, he will be calm, he will be relaxed. He will understand that there will be setbacks, it's a back and forth, and he will put in the time to actually learn the skills versus just trying to get rich quick. So really check your expectations, understand where they're coming from. And this is something that we do in the masterclass. There's this Trading as a Business course, which has a lot of workbooks as well. And we make sure that we challenge your view of goals and expectations. We help our traders to create a general sense of purpose and why. How does your trading fit into your overall life vision? And what are realistic and what are not only realistic, because, well, that's also a little bit arbitrary. What do you define as realistic? But what are worthwhile goals without having those crazy, absurd ideas of what trading can and cannot be. So it's really important that you check yourself and that you check where are your goals coming from, what is it that you're working towards, and is it really what you need, is it really what you want, and is there a different approach? Put in the time. I can't stress this enough. We will come back to this at the last part. And putting in the time, I've talked about this in the last podcast or the one before that, where you need to take trading seriously. Trading is a real job. Trading is a serious job. There's a lot of risks involved in trading, obviously. And at the same time, this means a big risk, potential bigger reward. However, you need to focus at the risk. And the fact that 95% or 99% of all the traders fail, I often say that I don't think it is because trading is especially hard, but it's because, first of all, a lot of people get into trading who are just there for the money and to just try to see if this is a better approach than playing the lottery. And they're just gone after a few weeks and months. And the other traders, they're never putting in the work. So I personally always believe that the failure rate among traders is so high because very rarely do I meet a trader that is really serious about their trading. I very rarely meet a trader that is really having a very thorough trading journal where he records all his trades, where he has a monthly or a weekly review process in place. I rarely meet traders that have trading business plans, which is what we have all our masterclass students make. We have a business plan template because it sets you up for your trading journey, and it helps you be clear about what you want, and it helps you create a vision for your life that is worth pursuing. So put in the time, really make sure that you have your priorities straight, and imagine that what is the life that you want to have in 5 or 10 years, and then just look at your daily and your weekly habits. Do your weekly and daily habits and the way you set priorities reflect where you want to be long term? Or are you just giving in to those instant gratification traps and temptations that are waiting everywhere? And there's nothing wrong with that, but you need to be clear of where you want to go, and do your daily habits, do they reflect that? And then make sure that they align. Recognize progress, something that many traders overlook. If you are serious, if you put in the time, you have a good trading journal, and you give yourself a lot of time, the progress in the beginning, it will come fast, but over time the progress will come in slower and slower and slower. And then it is often when traders get discouraged and then they do something they shouldn't do. I have met many traders that have made good progress. They went from consistently losing to break-even traders, which is already a very, very big step. And the step from breaking even to consistent profits is quite hard, and it does take a lot of time because the progress that you make on a weekly or monthly basis is just going to be very minimal, although it will add up over time. For those traders, I always suggest just go back to your trades that you took 3, 4, 5, 6 months ago. Look in your journal, look at how you approached your charts, the mindset that you have, and recognize that you have come a long way to make this step from losing to break even. And recognizing progress is going to help you create confidence in yourself, because you can see that, all right, even though it seems quite long with the benefit of hindsight, it seems like I've traded for a long time. Actually, I've made the progress that I needed to make, and it's all going to be good. I'm going and I'm moving into the right direction. I just need to understand that this is going to take time, but if I do something that I shouldn't be doing now, which is system hopping, changing your trading approach, or maybe risking more because you think more risk means that you can potentially make profits quicker, then you are getting off the track and you are going to reset all your progress. So periodically looking back at your trading performance and where you're coming from can help you create a lot of confidence in your skills and your abilities. Avoid gut feel. I know many traders have a gut feel, but you don't. It's the honest truth. If you have been trading less than 5, 6, 7 years, and if you are not profitable, you just don't have gut feel. Gut feel is used as an excuse from amateur traders, from losing traders, to just break their rules. I hear many traders say, I have a gut feel the euro US dollar is going to go down. And then I ask him, but is it based on your rules? And does the trade fit your trading criteria? And more often than not, they will say no, and they just don't want to miss the trade. They have FOMO, or they have whatever. Maybe they want to catch up on a losing streak. They want to end the week in green, and maybe they haven't had a trade in a while and they just want to trade. They are bored. So gut feel becomes this excuse to just get into trades that you shouldn't be in. And I know this from experience. I've met many traders that I mentor who have said they have gut feel, but once you look behind the scenes, it's not gut feel, it's just an excuse to break your rules. So make sure that you have a checklist, you have a review process, so that you can actually see how are those gut feel trades really working out, or is it just a constant money destroyer where you're just losing and losing and losing. Make sure to check that. Fear comes from uncertainty. I know many traders, when I talk to them, whenever you do a YouTube live, there's always coming up, how do you deal with fear? How do you deal with uncertainty? I'm scared of losing. I'm scared to pull the trigger. And fear comes often from uncertainty, because traders that don't have a trading system, they don't have trading rules, that have never backtested their system, and obviously then it is scary to trade because you have no idea what you're going to expect and what you could expect. And even if you have done all your work, there's a lot of uncertainty in trading involved. The best setups and the best trades will fail over and over again. But having put in the work and having a very, very clear process will help you remove a lot of uncertainty in your trading. I've seen it many, many times. Once we have pushed our masterclass students through the business plan exercise, and once we have given them a trading checklist where they can see exactly, okay, this is what I'm looking for in a trade, those are the good trades, this is how they look, this is the criteria that I need, and then they can follow this on their charts in real time. They can see, okay, I'm looking at the euro US dollar right now, it has this criteria is present, but this is not here yet, so I'm not ready to take a trade. So they can sit back, relaxed and confident that they are doing the right thing because it's not in their trading system and it's not their trading framework. And once they see that they have everything on the checklist is ticked, everything is there, the trade is as perfect as it can be, then you can take the trade with certainty and with confidence. Over time, you will see that even the best trades will fail. But if you follow the process and if you have a positive expectancy, which you will figure out over time, then even losing doesn't hurt that much. And you will see that. And this is one of the most important things that you need to get right. Remove uncertainty from your trading as much as you can. Put in the time, journal your trades, have a checklist, have a business plan, and then a lot of uncertainty, a lot of fear will go out the window. And it won't be perfect right from the start, but you will get into the right direction. You will make constant progress into the right direction, hopefully. And then over time, you can tweak it, adjust it, get better and better and better, step by step by step. But that's the only way. There's no other way. And I hope you did enjoy this video. I hope you got something from it. Let me know which of the 8 tips you find the most interesting. Which of the 8 tips should I make maybe a new video on, just focusing on one single concept to provide in-depth explanations? Let me know in the comments below. If you're watching this on YouTube, if you're listening to this on a podcast, leave a comment as well, leave a rating. It really does make a difference, and I always look forward to hearing your feedback. Thank you for watching, thank you for listening, and see you soon.